Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today I'm going to be going over the gold and silver charts as well as the gold to silver ratio in an article that I wrote that was picked up by TradingView just a little over a year ago. So let's not waste any more time and let's get into the charts. If you like the work that I do and the information that I provide here on YouTube, consider signing up for a Patreon membership, which is a great way to help support the channel, as well as to guarantee that I will be able to continue to make this type of content moving forward. I'd really appreciate it. This is an article that I wrote on TradingView, which was picked up by the editors back in September of last year, and I titled the article, Silver, the Biggest Cup and Handle of All Time. Now, scrolling down to the article here, it says, Apple's cup and handle pattern in the early 2000s is often cited as one of the most significant. After a prolonged downtrend, Apple formed a large cup and handle from 2000 to 2005, which, after breaking out, has continued to appreciate to this very day. However, Apple's pattern is nothing compared to the current cup and handle pattern that exists in silver, whether in size or in price. I truly believe that silver is currently the most undervalued asset and will not only attain higher prices than most can imagine, but will also rapidly begin to appreciate against gold, which currently has a ratio of 83.75 to 1. This ratio is irrational and unsustainable, as gold and silver are typically mined at a ratio of around 10 to 1. Even current U.S. Treasury mint coins, silver eagles and gold eagles, have a current exchange rate of 50 to 1 at face value. Historically, under the gold standard and the Coinage Act of 1834, the ratio was set at 16 to 1. Although this will not happen overnight and could take a decade or more to come to fruition, the unnatural and irrationally low price of silver is coming to an end. The overinflated gold-to-silver ratio will continue to fall as price manipulation ends and true price discovery begins. Note, I just want to make a slight addendum to the second paragraph where I said, I truly believe that silver is currently the most undervalued asset. I want to clarify that I believe silver is currently the most undervalued non-crypto asset. And we all know that gold and silver price has been extremely manipulated ever since Nixon temporarily suspended the dollar's convertibility into gold, of which, when looking at the charts, you can see an incredible difference between the price of gold before that time and after, as well as when you look at the dollar, because this basically gave the government the ability to print as many dollars as they wanted to moving forward, because once the convertibility of the dollar from gold was separated, there was no more any accountability in regard to the amount of dollars that were printed and put into circulation. Because anyone who was born after that time knows all too well that the price of goods and services only ever continues to go up. And that's because of the untamed amount of dollars that they are printing and pumping into the system, even now, which is basically the only thing that's keeping the dollar alive. And one day, I believe, sooner than most of us think, we are going to see the dollar move into hyperinflation, going the way that all fiat currencies eventually go, which is to zero. Now, jumping over and taking a look at the gold chart, this is the 3-month chart. We have to have a much larger time frame when looking at gold overall because there's so much history here. And the patterns that we're currently seeing go all the way back to the era when Nixon suspended the convertibility of the dollar into gold, which was on August 15th, 1971. Now, if we come and look at the chart right here, you can see that this right here was when that occurred. If we look at the chart previous to that, you can see that gold was basically stable, with the only exception being in this range right here, when Roosevelt seized the gold and revalued it to $35 an ounce. Even after that time, it basically remained relatively stable. But the second Nixon suspended the convertibility of dollars into gold, this is what we saw happen, which just goes to show you that this was all planned out, and that since that point, America was no longer run by the people, but has in essence, ever since been run by the bankers. But we can learn some very interesting things when looking at the current gold chart. We can see that we have, in fact, a primary 5-wave Elliott wave to the upside, moving up to about where we're trading now, with current price being within the primary wave 5 you can see right here in yellow, which started in the summer of 1999. This 5th wave also subdivides into 5 waves, which we can see. Wave 1, 2, Wave 3, which set a high in July of 2011, coming down here for the Wave 4 in January of 2016, into the current subwave 5 that we are currently trading in right now, essentially being the 5th of the 5th. Coming back to this time when we set the Wave 3 termination, if you set a Fibonacci level coming off of the Wave 1 termination here, coming off to the bottom range right here, it gives us these Fibonacci levels right here, where price topped out, pushing just above the 1.786, with this candle here bouncing off of it perfectly. Price then consolidated for quite some time, moving into the era that we are currently seeing now. These Fibonacci levels that I have set here go off of that same premise by pulling the levels off of this range right here and going up to the Wave 3 termination. So by essentially doing the exact same thing that we saw for these Fib levels here that were incredibly accurate, we get these Fib levels that we see right here, which puts the 1.618 at about $6,765, as well as the 1.786 at $9,504, which means that if these Fibonacci levels play out to the same degree that these Fib levels did, we could see incredibly higher prices even from current levels. But it is very interesting to see this pattern, and I haven't seen or heard of anyone else talking about the fact that we do have this 5-wave Elliott wave impulse to the upside and are now trading within the 5th wave of the subwave 5-wave impulse within that 5th wave of the primary 5th, which in many ways could give us some clues, because this subwave will also consist of 5 additional waves. So essentially, we would have the 5th of the 5th of the 5th. So if we can get an accurate count on the 5 waves within this subwave, it might give us a better idea of when this incredible bull run in gold might be nearing its end. It's definitely going to be something we're going to want to keep our eye on. Now we can basically see that same premise within silver, with the bottom being right here when Nixon suspended the convertibility of the dollar into gold. That's when we really saw silver just go on a tear, moving up here to the primary Wave 3 termination when the Hunt brothers attempted to corner the silver market. After a consolidation of 31 years, we saw this epic run back in 2011, topping out right here on the subwave Wave 3 termination. We are now starting to see an incredible breakout to the upside, breaking out of this 45-year cup and handle pattern that I was writing about in the article on TradingView that we just went over. Never in history has there been a cup and handle pattern anywhere near as large as the one you are looking at right now. This is by far the largest cup and handle pattern of all time, bar none. And when looking at this breakout that we're starting to see in silver now, as it is barely just starting to get lifted off the ground compared to gold, which has been running for quite some time, price is just barely starting to break out of the upper rim line. Now, if we pull a fib coming off of the primary 4th wave termination here and pushing up to the subwave 3 termination here, pulling it back down here to the low of the handle that we can see right here, you can see that it places the 1.618 at approximately that $600 level, in this case about $626. Now this certainly is not a level that's going to be reached overnight, perhaps not even in a year. But at the current level that we are seeing the dollar debased and the loss of faith in the dollar globally amongst other governments and people around the world, it's just a matter of time. But keep in mind that a large portion of the appreciation value of silver will likely be due to inflation. But at the same time, in times of high inflation, what would you rather be holding? Would you rather be holding an ounce of silver, which is real constitutional money, God's money, or would you rather be holding a piece of paper from the government, which is nothing more than a representation of debt, basically just a promise to pay? Because anybody that has lived even a short amount of time can tell you that the government never honors its promises. Everything they say is a complete and utter lie. And ever since the Federal Reserve came into play back in 1913, which is not a part of the government and is a private for-profit corporation, between the privately owned Federal Reserve and the United States government, these two entities have been doing everything they can to devalue and destroy the buying power of the dollar ever since. And at this very moment, right now, the dollar of 1913 compared to the dollar of 2025, our dollar today has considerably less than 1% of its buying power remaining, which means that it is nearing the end of its lifespan because there's nearly no value left for the government to loot. Now, you certainly don't want to be one of these people that don't have a chair when the music stops, because without a chair, when the music stops, you lose the game. And there's no better thing that you could hold than real constitutional money like gold or silver. Another technique that is often used to measure out the potential of cup and handle patterns is to go off of the low of the cup, form a straight line up to the rim line, then pull this line up to the top range, line up the bottom with the rim line to get an idea of approximately how high the price can go on this move. As often with these cup and handle breakouts, certainly not every time, the overall move will be to the same degree as the height of the cup. As you can see, whether you use the Fibonacci retracement or whether or not you use standard technical analysis techniques, they both take you to about the same area, which is a great sign because confluence only improves the odds of it coming to fruition. But as it sits right now, regardless of the price, I would much rather be holding gold and silver than any fiat currency that any government on earth offers. But that's just me. Now, in regard to the gold-silver ratio, gold has been valued at a much higher ratio than throughout the vast majority of history. Under the gold standard, 15-to-1 or 16-to-1 was standard. When we look at gold and silver eagles, gold eagles being valued at $50 face value, silver eagles being valued at $1 face value, essentially the ratio is 50-to-1. Right here on this monthly chart, going back to March of 2020, we saw a gold-silver ratio pushing up to about 127 ounces of silver to 1 ounce of gold, which is absolutely insane and only goes to show you the amount of pure manipulation in the market. This is absolutely unnatural, as silver to gold coming out of the dirt tends to be right around a 10-to-1 ratio, with gold tending to be basically just a pet rock with very little use compared to silver. And when you look at all the electronics that we use today that are just completely dominating life, between our computers, our television screens, our phone screens, there is by far a much larger need for silver as compared to gold. Now, of course, gold does not tarnish like silver does, but very few people know that silver is actually a better conductor than gold, and it's cheaper and more prevalent, which makes it a much better candidate to be used. Plus, its individual properties cannot be replicated by any substance on Earth, not even gold. But we are starting to see this ratio finally start to fall a little bit here to where it's currently sitting at about 83-to-1. Now we can see on this chart that we do have a fair value gap right here, which is centered at about 47.65. I do believe at some point we're going to see this gold to silver ratio come down to this fair value gap right in that 50-to-1 range. And the reason why I believe we'll see that is because of the ratio of the face value between gold and silver eagles. People are going to look at this and they're going to realize, wait a minute, if the exchange rate is 83 to 1 right now between gold and silver, but between a gold eagle and a silver eagle, it's 50 to 1. One could only reason that this is going to come down to 50 to 1 to match that price at some point. So I think we're going to start to see a lot of people out there realize that by buying silver, it's basically going to appreciate against holding gold. And by buying 83 ounces of silver now, which is the equivalent to an ounce of gold, once this ratio comes down to 50 to 1, they could exchange the 50 ounces of silver for an ounce of gold and basically pocket the additional 33 ounces of silver. But this irrationality that we see in the market now and that we have seen for quite some time, it's simply not going to last, because the ability for the central bankers to manipulate the silver and gold prices like they've done in the past by printing insane amounts of money and injecting it into the economy simply is not going to do what they need it to do, because faith is being lost in fiat currencies around the world, as you've recently seen with the incredibly long lines of people all around the world standing at bullion dealers just waiting for their chance to get in the door so that they can buy gold, silver, platinum, palladium, anything but holding dollars. This is only going to continue to accelerate as the dollar continues to lose value and continues to lose favor around the world and continues to be printed into oblivion by the criminals in Congress and the Senate that basically treat the American coffers like their own personal piggy bank. Accountability is coming, there's no doubt about it. But unfortunately, the dollar, as we know it today, is going to die. The game of Monopoly that they have been carefully building for over the last 100 years is almost to the point to where it isn't going to pass go, and you're certainly not going to collect $200. And if we're really lucky, we'll even see many of these criminals go to jail. And if you would like to trade spot, or if you're just looking for a place to swap your cryptos for zero fees, check into BitUnix. It's the only place I trade, and it's where I swap all of my cryptos, and you'll be glad that you did. So thank you so much. I appreciate each and every single one of you. Good luck, and have a great day.